Stocks fell again Tuesday to start the shortened week lower as we watch the heightening tensions between Russia and Ukraine. The S&P 500 shed another 1%, is now down to 4304. This is correction territory. In other words, down more than 10% from its high. The Dow and the Nasdaq also fell, and both closed at their lowest levels of this year. In a speech on Tuesday, Biden said he will enact the first tranche of sanctions on Russia in response to Russia's move to recognize two pro-Moscow separatist republics and deploy Russian troops into those areas. Biden also said that this is the beginning of a Russian invasion of Ukraine, so I'm going to begin to impose sanctions in response. The sanctions will be imposed on Russian financial institutions, sovereign debt, and oligarchs in the country. And the conflict compounds the headwinds that already exist. Investors are holding their breath in anticipation of the Federal Reserve's next move as the central bank looks to tighten monetary conditions to mitigate the inflationary pressures. I am personally dispatching our own subscriber, the Ambassador LLC, to look into the situation, and we hope the ambassador comes back with good news. Until then, let's take a look at the charts. While stocks have been hammered by a relentless, furious pounding for much of 2022, the S&P 500 has officially entered a 10% correction from its all-time highs. A look at market sentiment, which comes from the latest AAII Bull minus Bear Index, shows that trader sentiment has rarely been worse. Although this is not a timing chart, it is worth noting that the lows in sentiment do correspond to lows in the market, so we may not be too far from a low. Until then, let's take a look at the charts. And we're now taking a look at the 6-month daily chart on the spiders, the SPY, and the close on Tuesday was 429.57. So we are making this second downdraft here, and it looks like we perhaps have a little ways more to go, but we'll see. I would imagine that the probabilities here do indicate further on our way down. We'll look at that here in a second with the oscillators. But first, back to the formation is the W. Down, up, down, and then up. So we certainly haven't started that up move here. I thought there was a possibility at this point, but it failed when it ran into the 20 EMA and then got reflected on its way down. So I think perhaps there's still more downside. Now, always pay attention to first the monthly chart, then the weekly chart, and then the daily chart. The monthly chart is most important. We'll take a look at that in the upcoming update, and it's very precarious with the fast line in the MAC almost ready to pierce through the slow line. So that could be trouble. But for now, looking at the daily chart, it looks like hopefully we'll have a bottom coming here relatively soon. If we do have that bottom and that move on up, then it'll be a setup for a double top. So we'll just have to wait for that because that's dangerous as well. Moving down into the oscillators, you can see that volume for the most part is heading on down. We do have the spikes here and here, but you can see that the current spike is lower than this previous spike. So the overall trend looks to be down. So I think things are calming down, and I think things will be setting up perhaps for a bottom and basing in the chart. Here in the MAC, pretty much the same thing. We're having a rollover moving through here. You can see that the fast line came through the slow line, and hopefully we'll come on down. I don't think we're going to go all the way down here where we were previously. It's possible, but I don't think the probability is. I think the probability is we'll come and stop short of that. But that's only a mere guess at this time. I think, again, it is possible to go all the way down there, so just keep that in mind. Here in the histogram, certainly we're not going as deeply as we did here. So I would imagine that the histogram is going to bottom out well before that -4, and that's what you want to see. You want to see the histogram start to slow down, get this congestion in the bottom area here, and then turn up. You have the same thing here, a little bit sharper there. This is perhaps a little more like the late January into February move, and that's what I think is the most favorable outcome if we're to do that here. Hopefully we can bottom and base in that area. Moving down here into the price rate change, pretty much the same thing. The fast line came through the slow line on its way below that 0 or midline, so it looks like still more downside. Same thing in the relative strength, but we're here at about a level of 30 or so. I think it's possible to come on down further. I don't think we're going to come down this far. So once again, hopefully we can bottom and base here and maybe have an upward trend. Into the stochastics, you can see that the fast line, the separation between the slow line, is still pretty wide, but I'm looking for a bottom here later this week into next week, somewhat like this, actually more like this, where we bottom and base above that 20. This is a bit sharp here. I'm looking for something more like this. Moving down here into the Williams, pretty much the same thing. We're in that oversold territory below that -80 and into -100. We may be down there for a few days or so. Now, something else to take a look at that I actually didn't mention before, but a lot of these oscillators are showing a weakening condition. You can see here in the Williams, that move was a couple of months. This next move was only about a month and a half, and then the current move is only about a month or so. As you can see, these moves, these upward moves, were getting weaker as time went on. You can clearly see that there in the stochastics, maybe a bit there in the RSI, not so much in the price rate of change, nor the MAC. You can see somewhat in the MAC, but you wouldn't necessarily be able to pick that out. Those other oscillators, the Williams and the stochastics, were primary for showing that. So definitely we had a weakened condition. This again was that first move, and then we had the second move, and then now we're in the third move. So hopefully the third move is nearing an end. Hopefully we'll bottom and base in this area and move on up to complete that W formation. But then the next problem is up here. We have a ways until we get there, so don't worry about that for now. And for today, that's ChewDog Charts. Thank you.